All right, let's talk about Rocket Lab. Today, we're going deep into their latest financials. This is a company that's doing so much more than just putting rockets into space. They're really trying to build out an entire ecosystem from the ground up. And their new Q3 2025 report, well, it tells this fascinating story of absolutely explosive growth, but it's growth that's being fueled by some massive, massive investment. So we're going to tear down their official SEC filing to really see if these big bets are on the right track to pay off.
And that really gets to the heart of the matter, doesn't it? When a company is pouring billions of dollars into building the future of space infrastructure, is it really about profit and loss in this exact moment? Or are there maybe better ways to measure its trajectory? What we're going to see is that for a company like Rocket Lab, the real story, it's told in its growth rate, in its strategic chess moves, and, crucially, in its ability to fund its incredibly ambitious vision.
So, to get to the bottom of all this, here's our game plan. First, we're going to break down the two very distinct parts of Rocket Lab's business, because trust me, it is so much more than just rockets. Then we'll dive right into the hard numbers from their Q3 report. After that, we'll look to the future. What are the catalysts that could send them soaring, and what are the risks that could pull them back down? And then, to wrap it all up, we'll give you our final verdict based entirely on the source material. Okay, let's get into it with our first section, Rocket Lab's two businesses. And that subtitle you see, more than just rockets, honestly, that is the absolute key to understanding this company's entire strategy. Most people, when they hear Rocket Lab, they think of those spectacular launches, but believe me, that is only half the picture. You see, the whole business is split into two really powerful segments. Over on the left, you've got launch services, what we're calling their taxi to orbit. This is what they're famous for, right? It's the workhorse Electron rocket and the massive R&D effort for their next-gen heavy lifter Neutron. But look to the right, because this is where the story gets really, really interesting. Space Systems is basically their spacecraft superstore. Through some very smart strategic acquisitions, they now design and build everything, and I mean everything, from tiny components like reaction wheels all the way up to complete satellites. It's a brilliant move, it's vertical integration. A customer can come to them for one little part, or they can ask for the whole shebang, design, build, and launch a satellite all under one roof. Now, what's so fascinating is how this split actually plays out in the money. Just look at the Q3 revenue. Space Systems brought in over $114 million. That absolutely dwarfs the $41 million from launch services. Now, that might come as a surprise, but it perfectly illustrates their strategy. Launch is flashy, it's high profile, but the Space Systems segment, that is the economic engine of the company right now. It provides a much steadier, higher margin stream of cash that helps pay for the incredibly expensive, capital-intensive development of their next big rockets. All right, let's move on and see how all this feeds into Section 2, the Q3 financial report. This is where we get into the real nitty-gritty. We're going to crunch the numbers and see how those two business segments add up to the overall financial health, or lack thereof, of the company. Okay, the big headline number for the quarter is definitely strong. Rocket Lab posted a total revenue of $155.1 million. This top-line figure is really the first and maybe the most positive sign of the company's powerful momentum. It shows there's really strong demand for what they're selling across both sides of the business. And that momentum? It's speeding up. Revenue grew an absolutely incredible 48% compared to this same time last year. Now, that's not just some number on a page. It tells a story of execution. If you dig into their filing, you see this growth came from everywhere. Space Systems revenue shot up by over $30 million from satellite projects, while launch revenue climbed by $20 million. And that's thanks to a simple formula: launching more rockets and charging more for them. But here's the other side of that growth story, the bottom line. The company reported a net loss of $18.3 million. So you're probably asking, where did all that revenue go? Well, this is what it costs to build the future. They spent nearly $71 million just on research and development, and another $46 million on administrative costs. You have to understand, these aren't just operational inefficiencies. These are massive, deliberate investments into the future, especially into their game-changing Neutron rocket. So the multi-million-dollar question is, can they actually afford to keep spending money like this? Well, for now, the answer is a pretty definitive yes. The company is sitting on a very, very healthy cash position of over $807 million. This is the fuel for their growth engine. It gives them the runway to keep that heavy R&D spending going. And it's really important to know where that money came from. They raised a staggering $865 million this year just by selling new shares on the market. That's a huge vote of confidence, a clear sign that investors are buying into their long-term vision. So we've seen the performance. Now let's look at the potential. Section 3 is all about the future. We're going to cover the catalysts that could really drive growth, and then we'll look at the risks, as stated by management themselves, that could potentially derail this whole thing. It's all about understanding the path forward. Okay, a major catalyst is their recent acquisition of a company called Geost. Now, this isn't just about adding another name to the roster. This is a strategic capture of a critical capability. Geost's advanced optical systems for space domain awareness, that's a fancy term for tracking things in orbit, plugs directly into Rocket Lab's existing portfolio. This move deepens their vertical integration for sure, but way more importantly, it unlocks a much bigger piece of the very lucrative defense and intelligence market. We're talking about a sector with deep pockets and a growing need for the exact kind of eyes-in-the-sky technology that Geost provides. But let's be real, the single biggest catalyst on the horizon is Neutron. I mean, the quote from their own filing says it all. It's built for constellation launches. That is the key. Neutron isn't just a bigger rocket, it's designed to deploy huge batches of satellites for clients with these mega constellations, a market that's worth billions and billions of dollars that the smaller Electron rocket simply can't touch. Successfully bringing Neutron online, that wouldn't just be an evolution for Rocket Lab, it would be a revolution. It would fundamentally transform their scale and their revenue potential. It is, without a doubt, their moonshot. Of course, moonshots are risky, and to their credit, management is very open about this in their filing. The number one risk they list, a significant delay in developing Neutron, which is just a monumental engineering challenge. They also point out the risks from supply chain disruptions, changing government priorities, and of course, intense competition. Navigating all these external challenges is going to be just as critical as actually getting the rocket off the ground. Okay, time to bring it all home. We've looked at the two-part business model, the strong top-line growth, the huge strategic investments, and the very real risks ahead. So now it's time for our final verdict, based entirely on the evidence inside their Q3 report. So based on all the data in that Q3 2025 filing, our verdict on Rocket Lab's trajectory is improving. Now, yes, despite the net loss, the key indicators of the business's health and its future potential are all trending in a strongly positive direction. The bottom line is the company is successfully executing its growth strategy. And we base this improving verdict on three distinct reasons, all pulled directly from the report. First, you have that aggressive revenue growth. A 48% year-over-year jump is not a fluke. It is a clear signal of powerful market demand and their ability to deliver on it. Second, their strategic expansion in space systems. The growth of that segment and that smart acquisition of Geost, it proves they're building a more resilient, more diversified company that isn't just a one-trick pony relying on launch. And third, and this might be the most important one, is their strong future revenue visibility. The filing states their backlog of signed contracts is nearly $1.1 billion. Think about that. This isn't just wishful thinking about future business, it's a concrete pipeline of work that gives them a very clear runway of income for years to come. And so that leaves us with this final crucial question. All the pieces seem to be in place. The revenue is accelerating, the order book is packed, and the strategic direction seems clear. But it all comes down to one word: execution. Can they translate this incredible momentum into sustainable profit before their significant cash reserves are spent building out that future? That right there is the billion-dollar question at the very heart of the Rocket Lab story.